Hi guys, I'm back with another interesting concept where I'm going to carry forward the thought that we discussed yesterday. Now, yesterday we were talking about property, plant, and equipment, which costs to be capitalized and which costs should not be capitalized. There was one thing that I had specifically mentioned that we will cover it separately. Today, I will be covering site restoration cost, decommissioning, and dismantling expenses. Now, if you remember, what was the basic principle which suggested that cost should be capitalized? What was the basic rule? The basic rule said that if any cost, if any amount is incurred, basically any amount incurred which is necessary to bring the asset to its current location and working condition must be capitalized. Okay, now what are site restoration costs or decommissioning costs? Say I'm Reliance India Limited and I have started the work. I want to start the work of oil extraction in the Arabian Sea. Naturally, if I have to do oil extraction, I will have to set up some sort of a drilling equipment in the ocean. And that drilling equipment, of course, will start oil extraction. Now, because I want to do oil extraction in the ocean, which is a natural resource, I cannot do it by myself. I first of all need the permission from Government of India that I want to do this activity. Do I have your permission? The Government of India says, okay, you have our permission, but you have to promise us that after your oil extraction work is complete, then you will make good the damage caused to the environment. So if you have caused any damage to the seabed, you will make good the damage. You will not leave your equipment like that in the sea. You will remove that equipment. So you will dismantle that equipment and you will make sure that the ocean floor is intact. You will clean up this premises. So, and this is pretty much a compulsory condition. Okay. So the government of India will not give me the permission to do oil extraction unless I agree in a contract that I will clean up the site after 5 years of oil extraction work. And I know that after 5 years, I will have to incur a cost of, say, 10 lakh rupees. Okay. After 5 years, I will have to incur a cost of 10 lakh rupees. For what purpose? For the purpose of site cleanup. Now I know that unless I agree to pay this 10 lakh rupees after 5 years, I will not get the permission. So I sign a contract which says that Satyamed, you will be incurring this cost after 5 years. This cost is necessary to bring the asset to its current location and working condition. Why? Because unless I incur this particular cost, I will not get permission from the government of India allowing me to perform my oil exploration activity. Hence, the cost of decommissioning, the cost of dismantling, the cost of site restoration that I am going to incur after 5 years is absolutely necessary to bring the asset to its current location and working condition. Without that cost, I will not get the permission. So that cost is super important for me to bring the asset to its current location and working. Let's assume that Reliance India set up an oil exploration plant in Arabian Sea, and while getting permission, it had to undertake, that is, it had to agree in a contract that it will dismantle the plant, clean up the ocean floor after 5 years when the project comes to an end. The amount expected to be paid after 5 years is 10 lakh. Now, do I have any alternative apart from making the payment? No, I don't have an alternative apart from making the payment. So it is a present obligation. That is how we define a present obligation. That it is an obligation where you do not have any realistic alternative apart from making the payment. The payment needs to be done because the plant was already installed or I have undertaken to install the plant. That means the agreement has been signed and it is a past obligating event. The payment is compulsory under the contract. So very high chance that you will have to make the payment. It is a probable obligation and the amount to be paid. The amount to be paid is 10 lakh and a reliable estimate can be made of the obligation. A reliable estimate of the obligation can be made, which means the amount that I have to pay, the amount that I have to pay, Reliance has to pay, not me. Let's not put myself here. The amount that Reliance has to pay after 10 years, it fulfills all criteria for recognizing a provision. And unless okay, I'm so self-obsessed. I'm only writing I. It should be Reliance. And unless Reliance agrees to pay this amount 5 years from now, unless Reliance agrees to pay this amount 5 years from now, it will not be allowed to set up the oil extraction plant. So this amount is absolutely necessary to bring the asset into its current location and working condition. So it fulfills my basic condition or my basic rule that which amounts can be capitalized, any amount incurred which is necessary to bring the asset to its current location and working condition must be capitalized. It fulfills that requirement. So this amount should be added to the cost of asset. Now, the company is going to incur this amount after 5 years. Okay. So 10 lakhs is the amount payable after 5 years. 10 lakhs is the amount payable after 5 years, and I have to include it in my cost today. So I will calculate the present value of this 10 lakh and include that in cost. Okay. I will calculate the present value of this 10 lakh and include that in cost. Now, assuming that the interest rate is 10%, what is the present value of 10 lakhs to be paid after 10 years? Sorry, after 5 years, not 10 years, after 5 years. So what I'm going to do is I'm going to write down 10 lakh into discounting factor at the rate of 10% for 5th year. This is going to be 10 lakh into 0.621. How do I know this? I've been doing this for the last so many years. So naturally, I remember the discounting factor. I might not know my neighbor's name, but I know this. So this is 6,21,000. Now this is an obligation that has to be fulfilled after 5 years. So this is an obligation, which means a provision will have to be created, right? A provision will have to be created for this amount. So what I do is, let me add just one more detail. The cost of the plant is 1 crore. So what entry should be recorded? When I record the existence of this plant, I record an entry by oil extraction plant, account debit to provision for decommissioning cost account credit. Now you will, as you see more and more videos, as you get to know how I work, you will soon find out how obsessed I am about formatting. If it is not a certain way, it just makes me so uncomfortable. So by oil extraction plant account debit to provision for decommissioning cost account credit and to bank. Okay. Now this amount, I'm not paying it right now. by oil extraction plant 1 crores. ठीक है. Okay, provision for decommissioning cost. What is the present value of the amount payable? 6,21,000. Now we discussed at length as to why this cost is absolutely necessary to bring the asset to its current location and working condition. So it will get added here. 6,21,000 and the 1 CR. It's how embarrassing now. I mean, I have to literally count zeros all the time. Units, tens, hundreds, thousand, 10,000, crore. Indian middle class, you don't get crore so easily. Anyway, so how much did I pay immediately? I paid a crore immediately. And 6,21,000. What was 6,21,000? 6,21,000 was the present value of amount payable in the future, which is absolutely necessary to bring the asset to its current location and working condition. So I capitalized it. Now, what entry should be recorded at the time of installation of plant? I should record this particular entry. Now, at the end of year 1. Please understand what happens at the end of year 1. Now, ultimately, I am supposed to pay a certain amount to the government. That amount is whatever, 10 lakh, 15 lakh, whatever it is. Now, right now, I have created a liability in my books of accounts. It is an obligation. It is a payable that I have created in my books of accounts, and I have still not paid it for 1 year. So naturally, because I did not pay it for 1 year, I will have to add 1 year's worth of interest to this particular amount. So what I will do is I will record an entry by finance charges account debit, by finance charges account debit to provision for decommissioning cost. At what rate? 6,21,000 into 10%, 62,100. I will write the explanation also here. Please pay attention. Now, I have recorded a payable and obligation in my books of accounts. I have recorded a payable and obligation in my books of accounts at the start of the year, which I have still not paid at the end of year 1. So I should record interest slash finance charges at the rate of 10% on the amount payable, which is why I recorded an entry with 62,100. And this is my oil extraction plant whose life is 5 years. So I will naturally have to record my depreciation also by depreciation account debit to accumulated depreciation, which is my basic entry for any kind of depreciation that I have to record. So by depreciation account debit to accumulated depreciation account credit. My useful life is 5 years. This upon 5 should be my accounting entry. Are you with me, all of you? At the end of year 1, I record an entry by finance charges to provision for decommissioning cost, and I record my accumulated depreciation. Now, let's talk about year opening balance outstanding, interest at the rate of 10%, and then I have my closing balance outstanding. Let me call this column 1, column 2. Column 3 is basically column 2 into 10%, and column 4 is column 2 plus column 3. This is what, this is how I'm going to label it. Okay. Now, let's see what we can do about this. Can we simplify our lives? Let's try to do that. So, year 1, 2, 3, 4, and 5. And you see, I was telling you, right? I am obsessed with formatting. Unless it comes, like, it doesn't make me sit in peace. Okay, so what is the opening balance of provision that I recorded? I recorded 6,21,000. On this, I did not pay it for the first year. So there was a 10% interest or 10% finance charge that I recorded. Why? Because I have not paid my liability. Naturally, I will have to pay interest on it. 6,21,000 plus 62,100, 683,100. Closing balance for year one becomes opening balance for year two. Again, 10%. This plus 751, 410. So what I'm doing is I'm simply calculating interest on the amount unpaid, and doing that I am recording my finance charge for year 1 to year 5. Now in the fifth year, the opening balance was 9,09,206. On this, I calculated 10% interest, and my closing balance is somewhere around 1 crore 126 rupees. Now, of course, because this is the last year, I will make that small adjustment in my interest working. I mean, 127 rupees adjustment, and my closing balance is 10 lakh. Okay, so this is my working for the amount of finance charges. Now, this activity that we did just now, that is known as unwinding of discount. What is it called? It is called unwinding of discount. This accounting entry that we record, finance charges account debit to provision for decommissioning cost, that is known as unwinding of discount. Now I will record the entry at the end of year 2, 3, 4, 5, 6, not 6, 2, 3, 4, and 5. At the end of year 5, I will have an obligation standing in my books for 10 lakh, and then at the end of the fifth year is actually the date when I have to make the payment to the government. So I will debit the provision for decommissioning cost and I will credit my bank account. It's a simple procedure, just that we have to be a little vigilant. So why do I include the present value of decommissioning cost in my cost of the asset? I do it because it is a cost which is absolutely necessary to bring the asset to its current location and working condition. So that answers one more cost as to why it should be included in the total cost of my non-current asset when I am doing my initial recognition. So today we have covered one important concept on what other costs should be included in the cost of the asset. We'll be following this up with more interesting concepts on IND AS 116, which is about, sorry, IND AS 16, not 116. 116 is leases. On IND AS 16, which is property, plant, and equipment. So subscribe to my channel and be on the lookout for more videos. There are new videos uploaded in the evening at 8 p.m. every day. Thank you.